Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. It's Tuesday, it's the 16th of May. I'm a senior market specialist at FXCM. Please take note of my email address, rshaw@fxcm.com, and that is the email address to get me on if you need to contact me. I'm just going to go ahead and bring up our high-risk investment warning. I'll keep this on screen for a few moments. All right, let's just bring up our market commentaries disclaimer. And our references will be MarketScope 2.0 and TradingView. I think we'll spend most of our time, if not all of our time, on MarketScope 2.0 today. And I actually want to just carry on from where we left off yesterday. We spoke in a fair amount of detail around the China 50 yesterday. And one of the ways I think that we can analyze it is using a 30-week exponential moving average. I think if we add that in, it's used in Stan Weinstein's book, How to Profit in a Bull and a Bear Market, which the title's not the best title I've ever seen, but it's a really good book. And what Stan Weinstein says, if it gets above the 30-week moving average and the 30-week moving average turns up, we start moving into what's called a mock-up stage. And I'm just taking a look to see if there is a bottom here, a head and shoulders bottom. Now, the reason that I'm bringing up the China 50 again is because we actually had disappointing data come out overnight. We saw really a slowdown in industrial production. It came in at 5.6%. It was forecast to be almost double that at 10.9%. So I think quite a disappointing number there. And then we saw retail sales year on year. It was a massive jump, 18.4%, but it was under the 22% that was forecast. So just some slowing there. And you can see that the RSI is just below that 50. Ultimately, if this is going to be a bottom, we need to get that RSI above 50. And I just wanted to add that to yesterday's discussion because I think it adds a little bit more information. At the moment, we're really just chopping sideways. And if we go through to the daily chart, we're in zone 2. Zone 2 is the neutral area. So a little bit extra information there today. And then what we also spoke about yesterday was the US dollar. And I think that's the next instrument I'd like to tackle. So let's go ahead and bring in the US dollar now. The US dollar has a fair amount of support here because of the debt ceiling negotiations between the Republicans and the Democrats. And the next meeting is today. So there is a certain amount of risk that is associated with the markets today. And that is really what comes out of the debt ceiling meeting. Do the two sides find some middle ground that they can negotiate around, or do they both stick to their guns and the meeting comes out with something that is not quite as stable as the market would like? And take a look what's happening here. We're in zone 1. Okay, so we're in zone 1. Zone 1 is the bullish area. There is a modicum of risk here because if we go through to the weekly chart here, to me still has downside pressure, but let's keep focused on the daily time frame just because of the current item that is supporting the dollar, and that again, the debt ceiling negotiations. So we're in zone 1 here. On the daily time frame, we are above 50 on the RSI. Take a look now at the hourly chart here. The hourly chart here is looking really interesting. And we're starting to move. Okay, this is what we suggested yesterday, that there was a pullback potentially in the works. I don't know how much room we've got to move. I don't know if there are legs on the crosses here, but we've got the two triggers. We've got the EMA crossing to the upside. We've got the stochastic crossing to the upside. And what is going to happen if the debt ceiling negotiation is disappointing? I think we're going to get a movement up here into the 80 area. And if we get a movement into that 80 area, we potentially get the swing, right? So it started to move, but there is associated risk, okay, with this setup here. So just be very careful with the way you choose to handle this. Clearly, risk management and stop losses are non-negotiable. But the idea here is the greenback is a safe haven, and when there is uncertainty, and the debt ceiling is a big amount of uncertainty, we're talking about defaults on debt obligations. It's unthinkable. It can't happen. There has to be some sort of agreement. We've kind of seen this story before play out, and there is always some sort of agreement. The US, the last time they defaulted was in the 1780s. Okay, so we're going back a fair amount of time. It's just not a scenario that's even thinkable. So the idea here is, I think there is going to be some sort of negotiation and outcome. Whether that happens today or not is the big question. And I think there's still going to be some sort of pushing and shoving between the two sides. And I think if there is that sort of friction between the two sides, then we may get some sort of Anglian separation over here, and we may get the stochastic moving towards the upper quintile. Again, I want to stress, that it really depends on the outcome, which is an unknown. So just be very, very careful there. But if the dollar is starting to move, remember, it's the first in our chain of causality. It's the first link. Then other instruments are starting to move as well. The one that we'll go to right away next, euro. Okay, let's go through to euro. And take a look. Euro here is in this bottom channel. It's in zone 3 between the lower blue and that lower red. Where's the RSI? RSI is on the negative side of 50. So there does seem to be a bearish pressure here. That makes sense. Why does it make sense? Because there's a bullish pressure on the dollar. That bullish pressure is not primary trend. Primary trend of the dollar is not up at the moment. I think there is more of a pressure to the downside given where we are with the rate cycle. Nevertheless, the current market developments are supportive of dollar because there's pressure. There's pressure, and it's that debt ceiling, dollar being supported up, euro being pushed down. Go through to the hourly chart here. Okay, not quite as clear yet, so we've got to just keep an eye on this. Is there going to be a bearish cross? Okay, is there going to be a bearish cross here? Now, what's going to happen, in my opinion, is that if there is that pushing and shoving that we talked about between the Republicans and the Democrats, they're still being quite steadfast in their positions. I think we do get a push down to the bottom here. If there is some sort of sensible negotiation, then I think that the dollar gets sold down, euro gets supported. So there are catalysts in the market. The question is, which way do you think the negotiations are going to go? And that meeting's happening today. So you can see that there is a potential crossover on the euro side, just as there is a potential crossover on the dollar side. Okay, now a little bit of resistance coming in the R1 level for the US dollar. Well, you go through to the euro, a little bit of support coming in for the euro as well. So at the central pivot. So just be very cognizant that the setups are there. However, there's friction. There's friction in the market, and we don't know which way it's going to go. All right. Other instruments that we can look at. Well, if the dollar is being supported to the upside, Which other instrument's going to be potentially pressured? Must be gold. Okay, must be gold. Now, I want to just go through, before we go through to gold, just go through to the Euro US dollar daily chart. Here we can see it's in zone 3. Here we can see that the RSI is below 50. Gold, not quite as clear cut. Let's just go through to gold here. You can see gold actually in zone 2. Okay, so the downwards pressure that we're seeing on the euro, not quite as obvious on the gold side of things. So there's, if we're talking about relative weakness, euro would be weaker than gold on a relative basis. But you can see, where's this RSI? It's on 50, right? So the daily chart not looking nearly as fragile as on the euro, but you go down through to the hourly chart. The hourly chart's actually showing a little bit more give here than the euro. So there's a bit of an ambiguity between the two instruments, whereas the daily chart is in favor of the is in favoring a short on the euro. The hourly chart's favoring the short on the gold. So a little bit of ambiguity, and I think that's testament to the tricky situation that we find ourselves in, because again, I want to stress, is there going to be give in the negotiations, or isn't there going to be give? Now, what's happening here? Okay, some support coming in for gold. Why is there support coming in for gold? Because there's resistance coming in for the dollar. Okay, so if that resistance gives in the dollar, then I think the support gives in the gold price. Okay, I'm just going back to gold. So very, very interesting there. Another instrument that I saw was starting to move was actually cable. So let's bring up cable. Again, the daily chart on cable finds itself in the neutral area. Okay, it finds itself in the neutral area, but there does look to be a nice hourly signal to the downside. You're getting a crossover to the downside of the EMAs. You've already got a cross to the downside of the stochastic. What we need is some sort of angle and separation in the EMAs, and what we need is for the stochastic to make its way down to the low quintile. How would we get that? I know I'm starting to sound like a broken record here. If the negotiations are unsuccessful, I think we get the dollar supported, cable gets pushed to the downside. One more before we take a look at DAX. Let's take a look at the loonie pairing. Let's just go through to the US dollar Canadian. All right, and again, not quite as strong as we have seen on the euro side of things. It's in the neutral area, but there is some give here. See that? There's a crossover. So all of the instruments we looked at do suggest some sort of dollar support, okay, but it's rickety. It's rickety. How's that for an adjective? A little bit rickety. Okay, so let's just keep an eye on these. I do like the crossovers. Whether they develop angle and separation is going to be very, very interesting. All right, let's take a look at the DAX just to end off with. Let's bring that up. DAX, again, an instrument that I do like. I am a really interested technical analyst in terms of the trend, on the weekly chart. Higher trough, higher peak, higher trough, higher peak. I really like the way the RSI is moving along, and to be quite frank with you, I think that there is underlying support. See, we've got a buying tail here, and this is 5 weeks ago, a buying tail here, 4 weeks ago, a buying tail here, 3 weeks ago, and a buying tail here as well. So we got this kind of support area here, and the DAX is dipping into it. It's dipping into it. Daily chart, again, the squeeze on the Bollinger Bands, it's something that we've spoken about, and we're just going to have to be very patient and wait for the expansion to open. There is going to be there's going to be a movement here. The DAX can't stay at rest for long, so that squeeze is something that I'm very cognizant of at the moment. And right on this S1 support level, let's just examine this S1 support level. It's looking very interesting to me. Okay. You've got resistance, support, 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 support. Okay, it's at 15,890. Certainly seems to be a level that the market is paying attention to. What we need to see is a crossover upwards on the EMA, crossover upwards on the stochastic. We don't have those yet, and we don't want to forecast those, right? We don't want to predict, we want to react. So just keep an eye on that. And even if we get those, it's really key that the stochastic moves to that upper quintile and holds. If we move to that upper quintile and hold, then the momentum's on, and we get some sort of a potential swing. So at the moment, okay, we've got a very tight squeeze on here. Markets can't stay at rest, and I just wonder if the negotiations, there's debt ceiling negotiations, have an effect on the risk markets, and we start seeing global stock markets start moving as well. So let's just be very cognizant of that as well. Again, how would it work out? Well, is there going to be some sort of constructive negotiation or not? So that's where we find ourselves in for today. All right, if there's any questions, please go ahead and type those in. Any questions, go ahead, type those in. Tomorrow we will do a morning market review, and we will do a crypto minute. So please join me for those. All right, nothing coming in. So let us wrap up here, guys. Thank you very much for joining me this morning. I want to wish you a good day and a good evening ahead, and I shall chat with you tomorrow morning. Thank you very much.